Welcome everyone to the Watchlist, Australia's newest investor-focused webinar series for ASX listed companies to pitch to real investors and be added to their watch lists. I know each of you carefully curates your own investment watch list. Some of the companies on there you have invested in, and some of the companies are on there so you can keep an eye on them as potential investment opportunities. For companies, getting on your watch list is a big deal. It means they are being watched and have the chance to have you invest in them and follow their journey. The Watchlist is a fortnightly webinar that has been designed to offer a broad mix of industry focus and company size to deliver the maximum opportunity for listed companies to tell their story and hopefully make that leap onto a few more investor watch lists. Today, we're bringing some companies who I'm sure are already on your watch list and some you may be considering adding. Presenting today are Azure Minerals, Dreadnought Resources, Fenix Resources, and Pursuit Minerals. Each company will present, then management will be on hand to answer any questions you have. So make sure you have questions ready of management and submit them using the Q&A box. Okay, let's get started. Our first presenter is Dean Tuck, Managing Director of Dreadnought Resources, ASX code DRE. Dreadnought currently has 4 West Australian projects providing a diverse mix of geological terrains and target commodities, while ensuring year-round news flow. Dean, over to you.
Thank you, David. It's a great initiative by you guys, and great to see some of the companies here, especially Azure and Fenix are on my watch list. I've watched them for a while, so great to see them kicking goals. So I'll try and keep this short so we can make time for questions. So we're Dreadnought, and we'll give this a quick chat. Next slide. And we'll breeze through the disclaimer to the next slide. All right. So Dreadnought is a brief overview. As David mentioned, we have 4 projects within Western Australia. Each of those projects is quite a large scale project. I think we have over close to 10,000 square kilometers of Western Australia on ownership and exploration, and that's for a range of commodities. Dreadnought is an exploration company. We focus on boots on ground, making the discoveries and delivering those resources. And we've done quite a few of that over our very few short years of existence. Delivered the Orion discovery in 2021, and we're in the midst of delivering a number of rare earth and niobium discoveries in the Mangaroon project area, and about to embark on additional exploration and discovery processes across our gold at Mangaroon, our nickel at Mangaroon with First Quantum, and of course back up to the Kimberley with some more copper and gold discoveries hopefully to be made. We're led by Paul Chapman, Philip Crutchfield, Robert G, and we've just added Debbie Fullerton as our Chief Financial Officer. We have a very well invested company. We have board and management have put in close to $5 million of our own cold hard cash into the company to date, and we control about 15%. So we are certainly here to deliver shareholder returns through value creation by making discoveries and then finding the best ways to commercialize those discoveries to return money to shareholders. We'll move on to the next slide. I'll talk today a lot about Mangaroon. This is where a lot of our news flow is coming out of, and in particularly where we have 3 rigs turning at the moment. Rare earths discovery that we made just over 12 months ago with our first drill holes into Yin, right next door to Hastings Yangibana operation, which is going into development. The entrance to their mine sits on our tenements, so to say we're neighbors is a bit of an understatement. And we also have in this region the carbonatites, which I'll talk more in detail on the next couple of slides. But before we move on, I want to talk about the golds. So we've consolidated the Star of Mangaroon, the lead gold mine, 2 Peaks, and we're very excited about the work that's going on in the background there with Sam Bassetti and Matt Crow out there as we speak. We actually have a diamond rig turning, twinning some of those holes historically. The place hasn't been drilled in 20, 30 years plus, and really going to start getting our eyes in, generating targets for later this year, early next year, getting out there and doing some discoveries on the gold front. The nickel, we have the First Quantum joint venture. We have about 5 high conductive plates sitting there within the Money intrusion, and we'll be out there drilling those very, very shortly. So we're very excited about the Mangaroon project. It's over 5,200 square kilometers. It takes us 2-3 hours to drive from Yin up to the nickel prospects. So it's a very large land package, a lot of opportunity here. So rare earths is what we're focusing on. We'll go on to the next slide. We start off in And just over 12 months ago, we put our first drill holes into yin, some of the thickest and highest grade rare earth mineralization that this region had ever seen, which was quite significant considering that Hastings was going into development next door. We're probably the only rare earth player on the market that has a second mover advantage, and that's allowed us, before we even drilled that first drill hole, to know that we could produce a high quality monazite mineral concentrate, which is a very critical aspect of all rare earth projects, before we even got stuck into it. So with the metallurgy confirmed before we started drilling, we were lined up and prepared to hit this thing pretty hard, which allowed us to put out our initial resource in 6 months. And we just put out our second resource update within 12 months of our first drill hole, which has given us 20 million tons of rare earth mineralization, including some high grade components within that. Again, the metallurgy that we continue to do continues to show the production of a high quality monazite concentrate at extremely high recoveries. I think that next door Hastings and Gabbana is around 83, 85. To date, we've seen 85 to 93% recoveries. There's nothing like that globally. When you look at a lot of the other main carbonatite resources around the world, you're looking at anywhere between 45 and 65% recoveries. And it's certainly a big selling point of this region. Quality monazite, quality concentrate production with good recoveries, and a very high NdPr trio ratio, which, as we go into the global supply being dominated by neodymium and praseodymium, the higher ratio of neodymium and praseodymium in mineralization will become quite a significant selling point. Move on to the next slide. Stepping back out, you can see the yin resource there within the context of the wider Gifford Creek ferrocarbonatite complex. So you see Hastings resources and their ironstone scattered up there to the northeast. The yin resource, we delivered that 20 million tons. Our focus now is adding Y2 and a bit of mineralization to the north, and mainly really converting that to indicated so that we can deliver our scoping studies into this year, a lot of additional met work, and really underpin and prove the economics of the ironstone while Hastings is next door getting into production. With the ironstone set aside, we're doing a bit of exploration work, feeding back in what we've learned from all the drilling over the last 12 months. We have some IP crews out there to see if we can start targeting some more ironstones, and also ground gravity crews. So we'll see what comes from that orientation geophysical work. And we're also going to be shifting our attention back towards our carbonatites, where we've recently put out some good results. So in addition to the ironstones, which are similar to Hastings next door, we also have potentially the source carbonatite intrusions for the region, which sit down there at C1 to C5, which sits right on the Lions River Fault, crustal scale structure, right where you expect to see carbonatites coming up, and also just on our side of the 10-mile boundary, which is always very handy. The carbonatites have a significant scale and grade opportunity. We're only about 25 to 30% of our way through even just the first pass assessment of those carbonatites. And already we're seeing a high quality, thick and high grade rare earths, niobium, phosphate, titanium, and scandium mineralization, all the things you expect to see in a well-endowed carbonatite intrusive complex. Moving on to the next slide. So a bit of a close-up of the bit of drilling that we've done to date. So all those white dots you see on there are holes that have been planned and not yet drilled, and we'll be drilling those here in the very near future. We recently put out some infill drill results from C3, which is that CBRC 15 to 121. You can see there we're getting 100 meters at over 1%, including 9 meters at close to 4 and 25 at close to 3. There's some quite good mineralization as we go in. That first pass wide space drilling, those white dots you see on there, those are 160 by 160 meter space drill holes, extremely wide space drilling. 1 to 2 of those holes is designed to hit something like Mountain Pass, which only has a 750 by 150 meter footprint. So it's very wide spaced. It's to find areas within the carbonatites where the mineralization sits, and we still have over 70% of that drilling to be taken. So there's a lot of upside opportunity here, and that's underscored by what we've seen at C5 in that last drill result, where we hit some quite near surface, high grade niobium mineralization, and also some thick mineralization associated with that. So very excited to see what the rest of the carbonatites will deliver for us. We're delivering the rare earth ironstones, get that converted to indicated so we can put out the scoping study, prove the economics on the ironstones, which are next door to Hastings, and then get stuck into these carbonatites, stuck back into them, deliver that first pass drilling. On to the next slide. Looking at that, the C3 footprint is a good example of what we're trying to do. We do the first pass 160 by 160, come back in, do an angled fence line of 80 meter spaced holes, and try and find within that anomalous zone areas of higher and thicker grade mineralization. So you see what we're seeing here is the supergene zone residual mineralization, which is quite common across all carbonatite complexes. That tends to be the first areas to get mined. It tends to be higher grade, as a lot of the critical metals that we're searching for within these are resistate and they accumulate in that weathering zone. And then sitting beneath that tends to be thicker and lower grade mineralization, like a lot of deposits around the world. Move on to the next slide. So upcoming catalysts for us, we continue to drill on the rare earths. We have the 2 RC rigs there, the diamond rigs now over onto the gold mine to get our eyes in for that as we continue to move on and prepare for the other commodities we'll be exploring for this year. We're preparing for the money intrusion, nickel PGE drilling. We've just completed that heritage survey and we'll be mobilizing out there as soon as we get everyone organized. And we have boots on ground at Central Yilgarn doing target generation work. We got surface geophysical and geochemical crews out there generating lithium and nickel targets. Come August, we'll be drilling on the gold. We're delivering our C3 initial resource and start mobilizing up to the Kimberley to deliver the follow-up discovery drilling on the Orion copper gold discovery. September, we'll be drilling away. We'll be getting results back. We'll be up boots on ground on Bresnahan, get into that target generation work on the heavy rare earths and gold and whatever else we find out there in that fairly underexplored region. In October, November, December, continuing to explore across our other commodities, hoping to not only continue to deliver the indicated resources to underpin the studies on the rare earths, but additional discoveries on the copper and gold, the nickel, and the gold and everything else we have sitting within our portfolio. Next slide. So takeaway message, we're a very, very active explorer. We continue to deliver a track record of discoveries across a range of commodities. We have substantial projects. We're here to make these discoveries. We're here to deliver the resources, prove the economics, and then find the best way to commercialize those assets, either through partnership, joint venture, or outright sale of those assets, or bring them into production via some sort of spin out or other options there. We have an experienced management team. We're very well invested. We have $4.8 million invested to date, 15% of the shareholding. So you can be rest assured that any decisions that we make for this company is to deliver value and return money to our shareholders because we're shareholders ourselves.
Dean, a great presentation as always. Now, I should have mentioned 15 hour drive yesterday to get back from site to be here in time to talk to everyone today. So firstly, thanks for that.
No worries, a bit flat today.
You do look very sprightly considering the length of time you've been sitting in a car. Just come back from site. What's the mood? What's the feeling on site?
Oh, morale's always up on site, so getting fantastic results from the carbs, infill drilling on the ironstones, which is always exciting, seeing those thick intercepts out of Yin. Got our first diamond holes being drilled in, so twinning historical holes at the Star of Mangaroon and seeing what comes out of that, and doing all the boots on ground work and getting geared up for the second half of the year. I think we're all pretty excited about what lays ahead of us.
Step back a couple of years. A lot of what Dreadnought was really about was theories. What you thought might be there, what you thought you could find. You've done all the desktop work, but it was time to put the drill rigs in the ground. A great question here has come in. You know, did you honestly think 2 years ago, or a bit more than 2 years ago now, when you were listing, that you'd be where you are today?
That's always the dream. You know, there's never a guarantee in exploration. It's one of the things we always like to say. You know, we have to have the cricket season and footy season projects. We have 3-4 projects on the run. For every target we test, we want to be generating 5 new targets because it's a very low probability of success in exploration. So all we could do was our best. We built a team that we've worked together a lot over the years. We knew what we wanted to achieve and we knew how we wanted to achieve that. And so to see the fruits of that labor, it's certainly something that we're very proud of as a team. You know, you won't see a group more proud and making noise and things like that as probably the Dreadnought crew does. So it's a very close-knit group and we're very proud of what we've done. And we look forward to continue to deliver. So it's been a lot of fun delivering the copper gold discoveries in the Kimberley. You know, when we did that in 2021, that was our main listing asset in 2019. You know, we pegged Mangaroon because there was no guarantee that we would have success in the Kimberley. And so to not only deliver that success and those discoveries in the Kimberley, and then deliver a number of discoveries at Mangaroon at the same time is very exciting. So we look forward to continuing to do that across the board.
So Mangaroon was your safety.
That was right. It was pegged as a replacement for the Kimberley in case the Kimberley fell over. That's right.
And another question's come through in relation to that is, so how do you now turn your attention or make sure your attention? You've got two quality assets. One that, as you said, was, if it didn't come up, we've now got another to look at, but you've now got two quality assets. How do you divide your attention and make sure they're both resourced adequately?
The quality of the targets always determine the best things that they're going to get funded. So we advance our projects, to go out there and put a drill hole into something costs X, to put a resource on something costs 3X, and to generate a target costs very, very little. So we advance our projects, we give ourselves lots of options, and we look at and focus on what's going to give us the best return, what's the best, most attractive targets, and what can we deliver on resources. So right now, the rare earths have priority because the rare earths are quite critical, pun intended. And you also have, we had a very quick opportunity to deliver these resources and turnarounds on them within the timeframes that we had available. What we're doing now on the rare earths, we hope to be doing in the Kimberley next year on the copper gold discoveries. So prove up that scale, deliver those resources, and deliver that scoping study. But in the background, we got a team. I think there's 12 geos now, I believe, at Dreadnought. We have a very active team. All of us have worked together multiple times, multiple companies over the past. We know how we operate. And so each project is well looked after, and they're continuing to generate targets, and they compete with each other to see which ones are going to get the funding.
Now, I've got really good questions come through in terms of cabanatite, sorry.
Yes,
cabanatite.
Yeah.
I've got to get it right one day. What's the significance of that mineralization at Yin?
The significance of mineralization at Yin. So,
yeah. What's the significance of that type of mineralization?
So Yin's quite interesting. So the Yangibana Ironstone complex, which has been known about for quite some time through Hastings' work and the companies before it, is that it has some of the highest NdPr trio ratios anywhere in the world. So when you look at, you go back 30 years, rare earths have always been something that, when Mount Weld was first being looked at, they were assessing Mount Weld because they needed cerium and lanthanum for red phosphorus and polishing, and then europium became a big thing. And it's really only on the back of the electrification, they're seeing the rare earth magnets boom that we're seeing as we go to an electric sort of future, that neodymium and praseodymium are making up the bulk of the value and focus on rare earths. But all rare earths tend to occur together in the mineralogy. And so you look at global rare earth demand now, neodymium and praseodymium make up between 30 and 40% of that. And by 2040, 2050, it's going to be 40 to 50% of rare earth demand. It's going to be made up of neodymium and praseodymium. But most global deposits, the mineralogy only has 15 to 20% neodymium and praseodymium in that. And so in order to meet the neodymium and praseodymium demand, you're going to have to double and triple production of the other rare earth elements that are less attractive, and it's going to flood the market in that. And so by having a region that has some of the highest NdPr trio ratios anywhere in the world, the quality and attractiveness of that con, if you're running a processing refinery, you're going to want to be putting through the con that gives you the most of the metals that you want per unit of con. And so it's a very attractive viewpoint from that. And that's why from day one, when we put our first drill hole in, we had people approaching us for offtakes. So, again, that second mover advantage, it's very useful for us, not only because it allowed us to produce a con very early, but because a lot of marketing and familiarity with that concentrate's already out there in the market. The carbonatites are slightly different. So the ironstones are these sort of late stage strikes that shoot out. Globally, there's really only one or two other places where those occur in any sort of economic sense. That's Finn and Norway. Generally, the intrusions, the actual source intrusions like we have at C1, C5, that's where the bulk of the mineralization is. That's your classic Mount Weld, Arasha, Naguala or Mountain Pass or anything else like that. Those are your sort of source intrusions. You get a range of mineralization in that. That's more classic bread and butter sort of style. And as we get through that, we'll find zones within those carbonatites that hopefully have high-grade niobium, high-grade rare earths, phosphates, whatever else those things produce, and we'll assess from there. It's a lot of opportunity. The significance of carbonatites, I guess, from talking about the exploration success, there are no guarantees. I think studies historically have shown there's a 1 in 10,000 chance of a prospect becoming a mine. And when it comes to carbonatites globally, it's about 1 in 10. So they're very attractive rocks to have. They're very unique rocks. They're very funky. They're stunning to look at. They're confusing. They're fantastic. But they tend to be quite economic.
Great answer. Last question. There's been a big push by Western governments that we've seen in recent years to really support, enhance, and be part of the development of critical minerals. Is that generating further interest in particular in your projects around not just investor interest, but offtake interest, partner interest, all of those sort of things?
Yes, and I think there's two things really underpinning the attention in rare earths and critical metals. One of which is the overall desire to go to electrification, and that requires the magnets, that requires the rare earths. We're seeing that increase in attractiveness in lithium. You're seeing that in rare earths following right behind in lithium's footsteps. But then there's a second one, and that's a supply chain issue, and that's the more strategic, and that's the US versus China. So if you look at, or Western world versus China, wherever you want to review that appropriately, and that's creating a sort of a different dynamic within that. If you look at the capacity of creating magnets in China, there's already enough capacity to make magnets to supply the world's demand up to 2050. And so what you're seeing is there's going to be a demand to decarbonize the world, but then parallel to that is a demand to build out that supply chain ex-China. And so as the new kid on the block, if you will, with no offtakes or any sort of legacy issues sitting in there, we do have a bit more flexibility to look at where we send our concentrate and to work collaboratively with midstream, downstream, or mining processors to come up with something that is aligned with those political interests.
Great. Well, thanks, Dean, for such a thorough presentation. Thanks for driving such a long way to be here. Dreadnought Resources, clearly a company to watch. If it's not on your watch list, maybe it should be. So, Dean, thanks for a great presentation.
Thank you.
Next up, we have Tony Rovira, Managing Director of Azure Minerals, ASX code AZS. Azure has an accelerated growth strategy to rapidly advance the company's multi-commodity opportunity at Andover in Western Australia, with a major focus, as the slide suggests, being on the lithium potential, while still progressing the nickel sulfide project through exploration and development studies. Thanks, Tony. Over to you.
Thanks, David, and it's a real pleasure to be able to talk today about the Azure Minerals story that is unfolding at our Andover project. Andover is located in the West Pilbara region of Western Australia, and the photograph here on the first slide shows that it's a very, very really good place to be operating on. So we've got rolling hills, not much way in vegetation, lots of outcrops sticking out of the ground, good access in there. You can see a road in the middle background through there. So this is a pretty typical photograph of our Andover project area. Next slide, please. So let's have a quick corporate snapshot. We've got about 390 million shares on issue, and we've got a market cap today around that $640 million, maybe a little bit higher than that. So the company's come a long way in the last 8 months, from a market cap of about 70 million at the beginning of the year to now nearly 10 times that. So there's been certainly a very positive reaction to our lithium discoveries. Cash on hand at the moment is about 18 million in the bank with no debt. So the company's in a very secure place financially. Importantly, in terms of our shareholders, is having SQM as the largest shareholder on our register. SQM is the Chilean company, which is the second largest lithium producer in the world. It's currently building the Mount Holland lithium mine and processing facility and refinery in joint venture with Wesfarmers in southern part of Western Australia. So SQM came on board about 6 months ago and reached out to us. They made an offer to take nearly 20% of the company for a $20 million investment because they really liked what they could see in terms of the lithium potential on the Andover project. So that was a huge endorsement for the project at a very early stage when we actually didn't have any drill holes into the pegmatites which host the lithium. And since then, obviously, their foresight has proven to be very accurate, and we've come a very long way. The Andover project is a joint venture. It's 60% owned by Azure and 40% is owned by the legendary prospector Mark Creasy and his group. So that 60-40 joint venture is the dynamic that we are going forward with, because Creasy's 40% is free carried through to the decision to mine. Next slide, please. So we're talking about lithium, and that's what we are here today about. So move on to the next slide, please. The location of the project. You couldn't get a better located project. I know Dean was talking about driving 14 or 15 hours to come back from his project up there in the middle of the back of Beyond. Whereas here for Azure, we fly from Perth to Karratha. That's a 2-hour plane flight. And then there's a half an hour's drive along the Northwest Coastal Highway, which takes us through the town of Roebourne and then into the northern part of the project area. From there, we've got a lot of roads and tracks that spread out throughout the project area. So access into Andover is really good. And then we look at the other infrastructure facilities that are in the area. So we've got a potable water pipeline that crosses the project area. We've got a high voltage power line. We've got a gas pipeline, all of which are available for commercial third-party use. And in addition to that, you've got the Port of Dampier, which is located just on the left-hand side of that aerial photograph. It's a commercial multi-user port available for import and export of cargoes. To the south of us, off the screen, you've got Rio Tinto's iron ore mining operations. There's one of their railway lines that runs up our western side of our tenement up to the Cape Lambert for the exporting of their iron ore. And offshore, you've got Chevron and Woodside's oil and gas production facilities, and then their LNG processing facilities are onshore on the Burrup Peninsula. So this is a really infrastructure-rich area. It's heavily industrialised. And yet we have a 108 square kilometre mining tenement there, which upon which we're finding abundant amounts of lithium. So you could not get a better located project for both exploration and for mining. Next slide, please. So we zoom in on the project area. Andover's made up of 3 exploration licenses, which are shown outlined in blue there. We've got the town of Roebourne, a couple of kilometres to the north of the project area. Then you can see the Northwest Coastal Highway going through the northeastern part of the tenement. The red shapes that you can see on this image are the outcropping pegmatites that we've mapped and sampled. And you can see there's hundreds and hundreds of them actually outcropping. Individually, there's over 700. A lot of those do join up together. What we're finding in the area is that there is abundant outcrop. And so identifying these outcropping pegmatites has been relatively straightforward. Have the next slide, please. So we're looking at an area here that contains the pegmatite swarm of about 9 kilometres in an east-west direction by up to 5 kilometres in a north-south direction on the eastern side. Those pegmatites in there individually can be up to 2 kilometres long, maybe up to 100 to 200 metres wide at surface. And the surface sampling that we carried out in that area over most of last year and the early part of this year, with over 1,000 rock chip samples collected, showed evidence of widespread high-grade lithium mineralisation that was contained within these outcropping pegmatites. And in those outcrops, you can see abundant spodumene mineral, and spodumene is the preferred lithium mineral for extraction and processing. Some of the very high-grade samples you can see on the left-hand side there were over 35 samples were over 4%. A large number of 2, 3, 4, up to 5% lithium grades in outcrops. So it's one of the highest grade, if not the highest grade, lithium outcrops that has been discovered in Western Australia. Next slide, please. So the area where we're currently drilling is called Designated Target Area 1. There's a number of pegmatites in there, 4 or 5 of them that we're currently drilling. The reason we started drilling in this particular location is because that was the only area in which we had environmental and heritage approval in place, in which we were able to go and access with drill rigs to go and drill test those pegmatites. We did have all of our heritage and environmental approvals in place for the western side, the left-hand side of the project area. That's where we were previously exploring for our nickel and copper sulfide mineralisation. But the eastern area was a new area, so we needed to get those environmental and heritage approvals in place. The first of those is in that target area number 1, and that's where we're currently drilling. Next slide, please. So So we zoom in on this target area number 1, multiple pegmatites sitting in there. The bright red zones are the outcropping pegmatites, which stand boldly out of the surrounding host rocks, which are usually mafic or ultramafics. And then surrounding those, you've got that paler red shaded, which shows evidence of the continuity of the mineralisation. And that continuity is both demonstrated from the surface mapping and sampling, where we can see minor outcrop and subcrop there of the pegmatites, and also the drill holes that we've put into there show evidence of that continuity of the mineralisation, both along strike from southwest to northeast, but also up and down dip as well. The blue lines that you can see on there are the drill holes that we've completed, the diamond drill holes that we've completed to date. We've drilled about 30 holes into this particular area for about 10,000 metres. We probably have another 10 to 15 diamond drill holes to go just into this area alone. And we've also commenced a reverse circulation program a couple of months ago. So that's underway. Over 20 holes have been completed to date out of a total of 100 that we've got planned in this area. You can see that the fence lines, the drill lines that we put in there are about 200 metres apart with 50 metre spaced holes along those lines. The intention is to be able to drill this area out to a JORC resource status, which should be available or completed by the first quarter of next year. What we've seen with the continuous pegmatites here is strike lengths in excess of 1 kilometre long, confirmed by drilling, in an area where the outcrop evidence is over 2.2 kilometres in strike. So there's significant lateral continuity here, and the pegmatites are stacked one on top of each other, dipping towards the northwest. And true widths of the pegmatites in a lot of places are well over 100 metres. And within that, we are getting true widths of lithium mineralisation up to about 100 metres as well. We'll have the next slide, please. And some of the drill holes results we're getting back are just, as it says there, quite exceptional. We're getting very broad widths of mineralisation, in some holes up to 100 metres wide. Nearly true widths as well, of very high grades of lithium. And there's abundant intersections where we've got 40, 50, 60 metre wide zones of mineralisation. So this is some of the widest or broadest mineralised zones of mineralisation that have been identified in Western Australia, certainly in early stages of previous other companies' lithium exploration. And also what we're seeing in there are some very high grades as well. So for example, that hole 208, where we've got 22 metres at 3.5% lithium, that is one of the best, highest grade lithium intersections that I know of in Western Australia. So the diamond drilling is continuing, and there will be more results coming out very shortly from the results that are coming in now. The RC drilling is continuing as well, so there'll be a lot of information being released about those results as well. We'll have the next slide, please. When you're looking at the drill core, what's really important that we have determined is that we can identify the spodumene visually. Now, the spodumene in these photographs are the pale grey to white crystals that you can see in those 4 pieces of drill core. And that's fairly typical of the very high grade mineralisation that we see in the drill core. So you're getting 3 to 4 up to 5% lithium in these samples. And the background host rock is grey quartz. So where we see the high-grade mineralisation, it's usually just spodumene and grey quartz. And then as the grades get lower, you have other minerals that come in like feldspars, etc. What is very important for us is that we're able to identify the amount or an estimated volume of spodumene within that drill core. And that gives us a very strong indication of what the grades are likely to be in those pieces, those drill core and that drill holes. And from there on, we can actually plan and execute our drilling program 2 to 3 weeks in advance of receiving the assays back with confidence that we're actually continuing to hit mineralisation with the drilling. We'll have the next slide, please. So where to from here? Well, one of the most important items that we need to address at all times is both the heritage and also the environmental side of things. We're in an area which has cultural significance to the local traditional owners, so we need to be very careful of how we operate there. So we can't just go out and drill holes. We need to undertake heritage surveys and have clearances put in place so that we can actually go out there and drill. So the two areas where we've currently just completed heritage surveys are shown there as those white boxes, target areas number 2 and 3. Both of them have at least 3 or 4 large pegmatites in there, which extend over kilometres in strike length and up to 100 to 200 metres wide at surface. And they also contain or have returned very high grades of lithium from the surface rock chip sampling in the order of 3 to up to 5% lithium. So both areas, target area 2 and target area 3, are the new areas which we'll be starting our drilling on in the very near future. As I said, we have completed our heritage surveys in them. We are just awaiting final clearances to be able to put the rigs into those areas. So those areas, together with the target area currently drilling in target area 1, the targets that will make up the targets for our mineral resource estimate, which is expected in the first quarter of next year. Next slide, please. Thank you. Okay, so where to from here for the rest of this year? Well, we are probably 30,000 metres into a 100,000 metre drilling program. We started the diamond drilling back in March with 2 rigs, and then we had 2 RC rigs moved to site in May. We've got another RC rig drilling there now, and a third diamond drill rig is on its way as well. This is one of the largest drilling programs that's been undertaken for lithium in Western Australia that I'm aware of. And we're only undertaking that because we have the utmost confidence that we will be able to identify a lithium resource there that will be of world-class scale. We intend to be able to put out an exploration target in the current quarter, once we have a little bit more information back from both the drilling and from the assaying. And the mineral resource estimate, the maiden resource estimate, will be published in the first quarter of next year. At least that is our objective. We also have quite a few other pegmatite targets which have yet to be tested. There's another 17 on the project area where we have really good outcrop with containing significant amounts of spodumene and also returning high grades of lithium from that sampling. So there's a lot more areas yet to go and drill. We've also started some of the component studies of what will be the initial scoping study for the maiden mineral resource estimate out next year. So metallurgical test work is currently in progress. Heritage surveys are always ongoing. Environmental baseline studies are continuing as well. They've been underway for the last couple of years. We commenced those as part of the nickel exploration project 2 years ago. So those environmental baseline studies are going through their final year. And also we've got some new licenses we've applied for to search for groundwater, and hydrological studies will be taking place as well. So the intention there is that we want to be able to, as part of the exploration target, identify that the project does hold potential for hosting over 100 million tonnes of lithium resources. And if it does prove to be true that that project does contain that sort of resource, then this will put it into the top 10 in the world and potentially much higher up the ladder than that. Have the next slide, please. So that's the Azure Minerals story in the Andover project. It's certainly proven to be highly exciting, first with 2 nickel sulfide deposits discovered, which we've not really talked about today at all, and also now the lithium that we're drilling out, which looks like it could be a lithium project of world-class and world scale. Thank you.
Thanks, Tony. Great presentation, and clearly a project that has captured the market's attention, and looking at the number of questions that we've received, certainly a company that is on a lot of watch lists, and that's to be expected given the scale and opportunity associated with the lithium asset. I just want to go back a little bit in time. So Mark Creasy, probably for those who know of Mark, is probably one of the most well-credentialed exploration geologist going around, and a famous pegger of projects and a deliverer of projects. How hard was it to prize this project off, Mark? And now, how active?
It wasn't very difficult. Go on.
Sorry, and how interested is he in the exploration work being undertaken?
Right. Okay, can you hear me now?
Yeah, got you.
Okay, sorry, I got the first part of your question. In terms of pricing this project from Mark Creasy, it wasn't actually very difficult because our previous existence of exploring in Mexico. We came back to Western Australia. This is in early 2020. I approached Mark to see if he had any projects that he would consider vending into Azure, and he straight away said, yes, I have a really great nickel project called Andover located in the Pilbara. So we actually entered this project on the basis of the nickel potential, and we successfully found 2 nickel deposits. But who would have known that also on the project area, we had hundreds and hundreds of outcropping lithium-rich pegmatites.
And the second part of the question is, how active is he, given he's a rock kicker? He's a genuine rock kicker, and he loves kicking rocks and finding projects and developing projects. How active is he, or interested is he in the work that's being done from an exploration point of view?
He's not active in any way now, but he's certainly very interested, and we keep him well informed about what's going on. You're right, he's an explorer at heart. He loves making discoveries or being involved when discoveries are made. So we make sure that we keep him well informed about what's going on, and he's excited just as we are.
SQM, you touched on them, clearly one of the biggest lithium companies globally. How was it? How were you able to attract them at such an early stage into this project? Did they see the potential that you saw that early?
They approached us on the back of the initial rock chip samples. We didn't reach out to them. They called me on the morning of putting out a press release saying that we had some rock chip samples with some lithium grades above 1% in it. So then they asked for if they could have a look at the data and have a look at the project, and we signed a confidentiality agreement. They came to site with 2 of our geologists, and they hired a helicopter fly around for a day. And they came back, and within a week, they'd put a proposition to us that they would like to take a share of the company in order to gain exposure to the project. And they obviously saw something at Andover that they really liked, and now we understand why.
In terms of funding, a very, very aggressive program. What's the funds look like, and how far do they last in terms of exploration spending?
Yeah, we've got about $18 million in the bank at the moment, and we're currently spending $3 to $4 million a month. So, you can work the maths out on that. So there will come a time sometime in the next few months where we'll need to go back to the market and raise some funding. But at the moment, we are well cashed up. We are drilling with multiple drill rigs. We're returning some amazing results, and that we expect those amazing results to continue out into the future. So we would like to see the project develop just a little bit further before we go back to the market.
A great question here. You touched on the fact that the first area you drilled was really the only area you could drill, and because of a number of reasons in relation to access, and now you're gaining greater access. In hindsight, was it your preferred drill location, or now that you look at the total project area, are there other spots that are more exciting?
There were a couple of other areas that initially were higher priority for us, but we were unable to gain access to them at that point in time. So we ended up going into what we call Target Area 1, or where the AP 10, 11, 12 pegmatites outcrop. That was back then, but now where we're drilling currently, it's an absolute cracker, and it should have been right at the top of the table along with the other ones that we identified. But the 2 new areas that we've got, we've just completed the heritage clearance surveys on, and we hope to be drilling in those in the next few weeks. Those 2 are really high priority as well, because there's a large amount of pegmatites outcropping and contain spodumene at surface, returning high grades of lithium. So it's quite likely or possible that when we go and drill in those 2 new areas, we'll find similar volumes of mineralization as we're currently doing.
Now, management and boards don't like talking themselves up too much. And certainly in your case, in the Azure case, you're a pragmatic and conservative board, and albeit have big smiles on your face whenever we talk about exploration and results. the team itself has strong capacity in building projects, and in particular, you've developed and built projects historically, so you know what needs to be done.
Well, that's true. Yes, we have people on the board who are either personally or represent other major shareholders who have good experience in terms of discovery, development, building projects. And yes, I was involved with something similar back in the early days with Jubilee Mines when we developed the Cosmos nickel mine. And I would say that with our nickel deposits that we've got at Andover, they would be a joy to actually develop those ones. The lithium is proving to be something that is several orders of magnitude much larger. So that's going to be an interesting conundrum when it comes to the development and further development of that particular side of the Andover project.
Tony, a cracking story, clearly on a lot of watch lists, looking at the number of questions and comments coming through. A number of them are just purely congratulatory and wishing the company and yourself all the best going forward. So take those while you can and when you can. Appreciate the opportunity to hear the Azure story. Tony, we will follow with interest. Thanks for your time.
Thanks, David. It's a pleasure.
I'd now like to introduce Aaron Revelle, CEO and Managing Director of Pursuit Minerals, ASX code PUR. Pursuit is focused on platinum group elements, nickel, copper, gold in Australia, and lithium projects in Argentina, two world-class mining jurisdictions. I would like to thank Aaron for getting up very, very early in Europe to take this call and present to you today. Aaron, over to you.
Thank you, David. Good morning to all. I'm not sure if we can just run through to the introductory slide, but thanks for having us. As stated, Pursuit Minerals is a more lithium-focused developer where we are heavily focused on our Rio Grande Sur project and really building a top-tier lithium exploration and development company. Pursuit Minerals really has been a new entrant in lithium, having only completed the acquisition of this project, which was announced in December and then finally completed in March at the start of the year. So relatively earlier in our stages, but still relatively well advanced. The company is really focused on on this project, on the Rio Grande Solar, through a combination of factors. The project already sits within an existing NI 43-101 resource of 2.1 million tonnes. We've also got some quite active neighbours who have had some recent drilling success, with brine grades discovered from 800 to 950 mgli, which are some of the highest grades in Argentina and getting quite close to some highest of grades in Latin America. Additionally, along with the exploration, we're very focused on progressing our production scenario, which we've done through optioning our 100-ton lithium carbonate pilot plant that we're in the process of completing that acquisition. We also have a very highly experienced board and management team. So if you can flick to the next slide, please. Just a bit of a corporate snapshot here. We're currently capitalized, we're at the start of July at about 38.8 million, just a little over 3 million of cash in the bank, and our board comprising of Peter Wall, quite well known in the resources space, a highly effective resources lawyer. Mark Freeman, who along with Pete were part of the structuring of and acquiring our lithium deal. Myself, and then Mr. Tom Eady, who is quite well known in the resources space. Very well known for his time as chairman of Syra Resources, which he was a founder of at a 15 mil market cap, and then in the graphite space took that over to a 1 billion market capitalization. So just going up to the next slide, please. Along with the board, we're also joined with Alejandro, who is our in-country manager. Alejandro is a very well-experienced lithium professional, having previously worked with Rincon Lithium in the development of their operation prior to its sale to Rio Tinto up on the Rincon Solar. Very fortunate that he's also an Australian, Argentinian dual citizen and works quite close with me in dealing with a lot of the in-country issues. Next slide, please. So just a small snapshot on where we are. The Rio Grande Sur project is located in the Lithium Triangle, which is the triangle comprising of Bolivia, Chile, and Argentina. It's home to 50% of the world's lithium resources, with a lot of those now under exploration and development, with major companies showing significant interest. Argentina has elevated its status in the last decade, now with the third largest lithium producer behind Australia and Chile, and has the largest significant pipeline of new mines and projects in development in the Latin America region. Next slide, please. Looking specifically at Argentina, it's a very unique situation at the moment within the triangle. In the last 5 years, we've seen a lot of consolidation in a very limited number of areas. So the supply of real estate within the 16 salars, which we've labeled there on the slide, is becoming quite rare. So with Pursuit and this opportunity that we've been able to put together, the transactions will become increasingly harder in terms of finding quality projects. 17 salars exist within Argentina. There's a few smaller salt lakes which are not included, but of the main salars, we're seeing a lot of consolidation in the space. Most notably, Hombre Muerto has been very active with the merger of Livent and Alchem, effectively consolidating that salar. We've also seen recently in the last couple of years, Pastos Grandes, which has been heavily consolidated now by Lithium Americas. So we're expecting these trends to move forward, especially within Argentina, which is very quickly becoming a tier 1 address. Next slide, please. Looking at the lithium market, there's a lot of talk around where the supply is going to come from to meet demand. Lithium in itself is in a structural deficit. A lot of focus is on the spot price, which has rebounded from that 20,000 per ton mark earlier in the year, increasing back up to the 44,000 per ton mark over the last month. But the realities of these projects now is lithium is a lot more understood as over the last decade. And these projects are not without their challenges, both hard rock and brine, in terms of actually bringing them on into supply. So the demand in terms of especially driven by the EV sector, is really pushing for new sources required to actually bring on a new supply for long-term contracts to meet the forecasted demand. Next slide, please. At Pursuit, we're seeing really 3 main drivers behind that demand, and there's a real talk, and having just recently attended the Fast Markets Lithium Conference in Vegas in the past couple of weeks, where a lot of industry players met. A lot of consistent themes are coming out, really driven by 3 main factors. The first being the price strength, which is mentioned. We saw the price rebound from the low 20,000 per ton mark up to the 44,000 per ton, really signaling that there was almost a price floor indicated. On top of that, the Chilean nationalization issue has been talked about a lot now, where Chile has announced they intend to take a 51% stake in projects of a strategic nature. So questions really remain over the hard or soft nationalization and the threat to supply that could come with the remnants and memories of the 70s with Coldeco being born out of the nationalization of the Chilean copper mines. And then on top of that, now we're really starting to see that the lithium market is becoming too big to ignore, especially from the majors. If you compare Vale's precious metals units EBITDA in 2022 at a total EBITDA of about $500 million. Comparatively, you've got the 3 majors being SQM, Albemarle, and what is the proposed Alchem Livent merger having an EBITDA of $1 billion. So for the majors now, we're starting to see a lot of activity in terms of where Rio Tinto purchased the Rincon mine. That was a sort of a signal of major entrance into the space, where the space is effectively becoming too big to ignore. Next slide, please. So a quick overview of our asset here at Rio Grande. We have a just under 10,000 hectare position on the Rio Grande Salar. That's about 50 to 100 kilometers to the west of the Hombre Muerto Salar in the space. The salar in itself, as mentioned, has a existing NI 43-101 resource of 2.1 million tons at 380 to 375 mgli. When we were putting this project together, it was a bit more advanced in terms of the exploration. We weren't on a greenfield salar where there was no resource. So for us, it was a very key part of putting this project together, where instead of looking and exploring for potentially lithium, we know there's lithium there. It's more of a quantification of how much. The resource in itself has only been drilled to about 100 meters below the surface. So as we're seeing now with some other companies that are drilling adjacent or where we intend to drill, who are drilling down to that 500-600 meter level, we're seeing two things, which is the lithium is continuing to depth, which is expected across a few of the salars with very similar geology for some of the neighboring salars, and also importantly the grade. For us, it was really positive to see a neighboring company achieve grades of averaging that 800 mgli, but importantly going to that 950 mgli intersection, which was about 2 kilometers to the west of our Mito tenement, which is the large tenement in the north there. Next slide, please. As mentioned, this is the NI 43-101 resource. As you can see, it does start to increase with some of that red grade. And this resource was done through two parts of exploration. One was in 2011 through a previous owner, and then LSC Lithium in 2018. Next slide, please. For us, these two maps were very key in when we put the project together. As mentioned, the Rio Grande Salar has been quite heavily explored. There on the left side, you can see the drill cores or previous drilling, of which some are very close in proximity and even on our tenement position there. In terms of the strike, it's about a 10 to 15k east to west across, and about 20 to 25 k's north to south. So a lot of historical information where significant drill grades had been intercepted in that 400 mgli. Comparatively, that's at a base grade very similar to the Rincon Salar, which is where Argosy, ASX AGY are currently developing their projects, and Rincon are, the Rio Tinto also developing the Rincon project. In terms of coverage, there's been quite a few drill cores, as can see, and the drilling along with the CSAMT previously identified two key depositional centers which hosted a lot of the lithium resource, which for us, we're very fortunate that our tenements sit within those depositional centers. So from an exploration standpoint, it's not a greenfield exploration. This is more of a quantification exercise of knowing that there is lithium there, but identifying how much of that resource is on our tenement position. Next slide, please. Again, some of the historical exploration through the previous CSAMT survey. These cross sections are an east-west viewpoint from a north-south trend line. Again, you can, with the red borders, you can actually see the brine floating between our tenement boundaries. We were very fortunate, again, with the prior drilling. So within our main tenement, which is subject to an exploration program of our own drilling at the back half of this year, there were some really promising grades of that 395 to 391 on that tenement. And then also a twin core came with 361 mgli. So for us, we intend to drill quite significantly deeper, aiming between that 400 to 600 meter when we do our maiden drilling program later in the year. Next slide, please. As mentioned earlier, we have our Mito tenement on the northern side, which has very similar geological characteristics to where currently Galan is drilling on its Hombre Muerto West project. This project is not on this tenement isn't on the salar surface, but there are strong indications from adjacent drilling that the alluvial plain extends underneath the andesites and breccias where brine is present. As mentioned, an adjacent company, where you can see on that red circle, they were drilling to a depth of 600 meters and found significant brine intercepts, including up to grades of 950 mgli. So for us, when we come to drill this tenement, whilst it was originally purchased for infrastructure purposes, where we have space to position a plant and build evaporation ponds, this tenement in itself does have some exploration upside potential as well. Next slide, please. Again, these are some of the adjacent geological examples of that project. As mentioned, Golan Lithium in the side there. Arena Minerals had a very similar event where they weren't drilling on the main part of Pastos Grandes and found lithium, quite significant lithium to significant depth, 641 mgli at 620 meters to depth. So for us, the upside potential is clearly evident in the Mito tenement when we look to drill that. Not in our initial campaign. Our initial drilling campaign will focus on the Salar tenements, but we'll look to drill that towards the end of, the first half of 2024. Next slide, please. As mentioned, a key component alongside the exploration for us is the development of the lithium carbonate that we're looking to produce from this pilot plant. We optioned this pilot plant for acquisition that we're currently in the final stages of our due diligence and hopefully set to acquire within the coming months. This plant has a nameplate capacity of 100 to 120 tons per annum, very similar to AGY when they started their operation about 2018, 2017. If you go back through and look at the journey of some of our peers, many have started with a 100-ton plant and then moved that to either a 2,000-ton plant, which is in which Argosy did, or in the case of Orocobre, now Alchem, they went from a smaller pilot plant right to that 20,000-ton scenario. So for us, this is a very key plant where we aim to really focus on the production piece. Whilst the resource piece is obviously very critical, for us, the real value driver of this project is the ability to actually produce the lithium carbonate. For us, we've been working quite heavily with some tier one consultants who have worked extensively in the Puna on the development of various brines and the processing options. So for us, this plant, the intention is to actually have brine running throughout the course of this year, where we will have from our pumping wells or intended pumping wells at site, we'll be trucking brine down from the Salar into this plant upon completion of its pending acquisition. So this plant is a real value driver in the terms of actually being able to produce lithium. Lithium projects are quite abundant on both the hard rock and the brine side. However, for us, we really see the value and the key differentiator in the production piece, which has been a key focus for us. Next slide, please. So currently at the moment, our work streams are headlined, and we're actually set to complete our TEM and CSAMT survey. The TEM, having already looked at some of the preliminary results, which should be announced to the market in due course, the preliminary field works are very consistent with what we've seen in the historical exploration, and I've identified some really solid drill targets, which we intend to undertake at the back half of this year. The CSAMT is currently ongoing up at the Mito tenement there. So for us, we've been quite excited and looking forward to the next stage, which is upon completion of the TEM and CSAMT to commence the drill program, which we're currently in the final stages of the environmental permits required for that workflow and work program. Next slide, please. So looking at our go-forward plan, it's quite an aggressive series of events. However, we're very well positioned to meet these deadlines, and very fortunate that there's been significant prior exploration on the Salar, which allows us to move quite quickly and quite aggressively. We're focused heavily on the production piece from our pilot plant, but also looking at the commencement of our drilling campaign with the target of defining a maiden JORC resource towards the end of this year. upon completion of the pilot plant acquisition, our intention is to rapidly bring that back online. The plant in itself has previously produced lithium carbonate from other salars in the Puna. So for us, we have a technical team working on adjusting that block to the Rio Grande Salar, while simultaneously running the exploration program, which culminates in defining a maiden JORC resource. These events are what we see as the key value drivers, especially in the lithium thematic. Lithium in itself is in a very intense structural deficit, especially with the push of EV manufacturers and the IRA legislation from Biden. There's some quite ambitious targets which will require significant new supply to come on. So for us, we feel we're very well placed to meet the demand response, especially as we progress the project quite rapidly and quickly throughout the rest of 2023. Next slide, and that's, I think, it from me.
Perfect. Thanks, Aaron. Great presentation. As I said at the beginning, sometimes it's about looking at your watch list, looking what other companies are doing and thinking, maybe I'll just put this stock on and see. And certainly with a big news flow coming and a lot of work happening, Pursuit might just be that stock you want to put on the watch list. Now, we do have a number of questions. The first one is in relation to the salars. As you mentioned, it's a busy part of the world and there's a lot going on. How much do you learn by what's happening around you?
Quite a lot, to be frank. We've seen the evolution of the salars and brine projects really since 2008 when Rincon and Orocobre burst onto the ASX. We're very fortunate that there is a lot of technical and top technical development within Argentina coming out of some very well-known companies. FMC Livent has been around since 1987, producing in Argentina. So there is that opportunity in terms of project development to learn from others. However, a lot of the major technical consultants are very well staffed with some very key people that have worked on several projects. So there's a lot of experience and a lot of learnings that are coming from those around us as they progress their projects as well.
From an education point of view, how much education is needed to explain the positive elements of brine production?
Brine production, I think, really goes back to the genesis of FMC. I mean, if you look at FMC Livent, they actually moved away from hard rock production to brine production in the 80s as it was cheaper, faster, considered more efficient to feed their Bessemer City hydroxide plant. I think brine has a very solid future against the hard rock projects. Not that they don't have their place. I mean, Greenbushes has and always will be one of the most amazing ore bodies that you'll stumble across in Australia. But having said that, the brine projects are on the lower cost quartile. They are cheaper and easier to explore in terms of, for example, you're not drilling within a 5-meter spacing for a measured resource. You're using a pumping well, as brine is a dynamic resource. So I think from when investors really start to understand the nuances and the really fine detail, you can see why SQM, Albemarle, the core of their lithium businesses being the largest producers of brine projects in the Atacama. Not without challenges. There is some geopolitical challenges naturally within Chile. The nationalization or the introduction of the nationalization legislation is something that a lot of people watch with concern. But at their fundamental level, the brine projects are quite exciting. They have the chance for rapid development, especially given the focus now of technology in terms of both conventional and DLE processing as well.
Just touching on that rapid production and as you say, the potential is there to bring projects into production very quickly and very cost effectively. Is it a bit of a race? And you can be swept into that race. That as you said, that the brines are liquid, so they're not just all sitting in one spot. They do generally move around in a positive way. Is that the opportunity, being able to get to market as quick as possible?
Absolutely. I think that in terms of, if you look at the lithium market, majority of lithium is sold on long-term contracts. The spot price presents a lot of interest but it really accounts for a very small percentage of lithium sales. If you look at the longer term fundamentals required for the demand side, supply is needed. Both hard rock and brine projects need to come online. In fact, nearly all of them need to come online to meet these projected forecasts. So from our perspective, as mentioned with our pilot plant, we have significant interest from potential off-takers, as there isn't many plants that are actually coming online. Yes, there's a lot of exploration in the Puna there, and there's a few ASX companies, at Rincon, at Inhuasi, Pasitos, drilling. There's obviously the DLE piece, and you're either a believer or a non-believer. For us, we're continuing with the conventional processing, as we feel that's a right fit for where we intend to take the company. And that's our first and foremost priority in terms of the processing piece. However, DLE has its place. It is likely inevitable that someone will crack that. Sunresin in China has a 10,000 ton plant. There's a few French firms that are moving quite rapidly with, again, scalable plants. So from that perspective, the production piece is probably the most valuable and does present a significant opportunity in the brine space.
And similarly to the questions I asked, certainly Dean at Dreadnought, how much do your neighbours watch what you're doing? While yes, you're a small company, and if I go back 4 or 5 years, Galan was a small company in its journey and it was building out its profile. How closely do your neighbours watch what you do? And is there an analogy for you and potentially shareholders with what Galan and others have done?
Oh, absolutely. I think that we're really looking to replicate the successes of our neighbours. You look at both the neighbours in terms of the bigger side, and in Argentina, there's a lot of M&A activity from oil companies at the moment. Plus Petrol purchased LSC Lithium, and now you're seeing Tech Petrol looking to acquire a TSX company, Alpha Lithium, which has a spot on Hombre Muerto. Even within the space, there is significant opportunity for that re-rate, where you've seen, as you mentioned, Galan and both Argosy, they've worked their projects up the project development. Argosy now, obviously in the processes of its 2,000 ton plant in continuous production, the third producer on the ASX. And Galan obviously defining a near 8 million ton resource. So for us, we're looking to capture both of those elements on the resource side, looking for a significant resource, but also the production piece. Again, if you go back, AGY was a 350 mil market cap company when it started production from its 100-ton pilot plant. So for us, whilst we're small now, achieving those milestones allows us to walk the project up the value curve. And M&A in lithium is heavily active. We've seen the base rate of an EV for a solar such as Pozuelos and Rincon go for that 900 mil mark, with both Ganfeng acquiring Pozuelos and then Rio Tinto acquiring Rincon. So I think there's a lot of looking over the fence from a lot of people for various different reasons in the Argentinian Puna. And that all comes down to the fact that there's such limited real estate. Deals like Pursuit Minerals and its acquisition of the Rio Grande project. Finding on solar, prime tenements that have historical expiration, it'd be very, very difficult to do, say, within 2-3 years from now. The real estate will be exhausted. We've just seen consolidation through Livent, Alchem in the space. And I think personally we'll see a lot more consolidation as there's only a limited number of projects. So, and demand is heavily outweighing supply for these projects at this point in the market.
And the $1 million question, well funded?
We are at the moment, but like everyone else, we have enough cash in the bank and several $1 million that gets us through our exploration program. Our burn rate allows us to get through these activities, but as a few of the others have said, we're likely to come back to the market in due course just to increase so we can continue adding value for shareholders. A lot of these programs, we're very fortunate that it's a little bit cheaper than a hard rock play. But having said that, we've got some exciting things that once we complete our planned drill program and acquisition of the pilot plant that we'll want to continue doing as we walk the project up the value curve.
Thanks, Aaron. A great presentation. Thank you for getting up early. The sun's starting to come out for you there in Europe, but I do appreciate you getting up early and giving the presentation for Pursuit Minerals. If it's not on the watch list, maybe it should be. A well-funded, clear plan, great project locations, and clearly in the right neighbourhood. So, Aaron, thanks for your time.
Cheers. Thanks, David.
As I said in my introduction, the purpose of this webinar series is to give you the opportunity to engage directly with companies that are on your watch list and to give you ideas of companies you might want to potentially add to your watch list so you can follow them in the future. Unfortunately, we were hoping to have John Welborn from Fenix Resources on today, but in the background, we've been moving things around significantly as he's been in a meeting with the Minister for a number of hours now, and that is obviously clearly important to him and the company. But we will look to get John on in the next couple of weeks so that we can bring the Fenix story to you. So apologies there, but we've had 3 absolutely cracking stories. Clearly, a number of these companies are on your watch lists and or should be. So if there are, look at your watch list and let you know if there are any companies that are on there that you'd like us to present to you moving forward, or are there any on that you've been thinking about that you'd like to hear from? The contact details for Stuart are there on the screen. Thank you to the presenters for making the time to present and for you for watching. We'll see you again in 2 weeks' time. Have a great